Hey guys, this is going to be a quick video, market breakdown video on EURUSD and USDJPY as requested by one member in the Discord. Now, EURUSD is in a very interesting position because we have this clear five-wave impulse move to the downside. It's in with my belief to believe that this market has now formed a low as wave five or five of one on the larger degree, and now we are due for a turn for wave two after this impulse wave decline. Now, most importantly, before we even look for any trading or trading opportunities, we want to see a break of structure and we want to see momentum increase, and that's what we're looking out for Euro USD. Now, we could also say that this potential ending diagonal as wave five is not over yet, and we are still due one more low, and we are looking at something like this, and we could still see a further drop in price. This is very much possible. So we need to keep this idea in mind. However, because of the current structure of the trend, it's in my belief to believe, right, because of what the dollar is doing right now, that this here is the current low of the market and we are due to move higher. Also, giving consideration to what's happening in the stock market, this would be a very, very viable wave count and suitable wave count for the current structure of the overall market. Now, normally for second wave retracements, we see a 61.8% retracement to a 78.6% retracement. So this would be very suitable for a second wave move higher. We must also keep importance and keep an eye on the wave four of the lesser degree because this poses resistance in counter trending moves, especially in impulse wave structures. So the 1.19950 level is going to be a very important level for this market as to where the market may bounce off or may even terminate off in the near future. So as we look at this level, as we look at the broader spectrum of the market, we can definitely tell ourselves that this market is due to make a move higher and, of course, follow through for a third wave decline, especially when we look at the higher time frame structure. Now, the higher time frame structure is very important because the higher time frame structure tells us everything we need to know. This leading diagonal pattern is the forefront of the entire wave count. This tells us at a minimum that we should expect at a minimum an ABC decline or a five-wave impulsive decline in the near future. This also tells us that there is future dollar strength to come. However, we must also keep in mind that this potential pattern could be some sort of ABC pattern correction, and prices may move forward higher in the near future, and this could also pose an issue as well to current our current dollar bias, our bullish dollar bias, and for the fact that the market is in a very, very critical position across the broader spectrum. So we also must keep in mind that there's various possibilities in how we can approach this, and various possibilities in how the higher time frame is looking and how the lower time frame is looking, and how we should be able to capitalize on whatever the market does next. So keep in mind of what EURUSD is doing right now. The 117.64 level is our validation level. At the very least, we should expect to move higher. However, if we do see a move lower, then we would have to reevaluate whether this is actually a continued impulse wave in progression, and if this is the end of an ABC decline instead of an extension wave. If it is to be an extension wave, ideally we would like to see price hold above this 117.640 level. Otherwise, we may have to consider this market being an extension wave. Now, moving on to USDJPY, which was the second requested pair, we can see that the market has recently completed this ending diagonal pattern as wave five as part of the larger time frame sequence or the larger degree sequence. Now, Because I have labeled this as wave 5 and I see this as a wave 5, I suspect that we should see a more healthy correction as wave B uh, as part of this double zigzag pattern because of the larger size of this impulse wave moving higher. Now, keep in mind, we could label this here as wave B on the higher time frames and the lower time frames as a completed double zigzag, right? If we wanted to look at the market this way and say to ourselves, okay, well, this is a ABC pattern, right? And this is wave Y here. And we are beginning the next impulse wave pattern. Now, for this kind of scenario to be true for us, ideally, we would want to see a fib retracement, a reversal of one of these fib retracements, ideally the 618. And then we would be labeling this as wave 1 of 2, and a new impulse wave would begin. So if this kind of scenario was to play out truthfully, then we would like to see a retracement down to the 50%, 61.8%, and this market would need to make a new high above the high of wave 1 to satisfy this kind of outcome. However, if prices continue to drop here and we see the market look to drop to the downside and break the low of this wave C, then we would have to consider this to be a sideways correction and a free wave move to come. So we'd be looking at something like this, right? We'd be looking at a sideways correction for a running flat and then a ABC decline, a continued ABC decline. We can also draw a corrective wave channel, which is a parallel channel, which would give us a rough minimum target of where we should expect the market to at least drop to with parity of the previous wave. So our minimum target for USDJPY, if the market looks to continue to drop and breaks the low of wave B, is 108.475. However, we may also look at the 1618, which gives us a minimum target, a maximum target of 107. 160. So we should be looking at these two levels going forward as potential levels as to where the market may drop to. This would then, of course, be wave B here, and we would likely see a continued progression. Now, looking on the hourly timeframes, what we already know is that the market has completed a very, very clear 5-wave move higher. So this tells us at the very least that we should expect downside nonetheless, whether this is temporary downside or whether this is downside in the form of a 3-wave move as part of the larger degree sequence. Time will tell. However, I'm very much inclined to believe that we are going to see a break of these lows because of the price action of the dollar currently, and we're going to see a continued progression leading into next week and the week after. So going on from here to conclude, EURUSD and USDJPY are looking like great trades or great trading opportunities, providing we see downside progression in USDJPY and upside progression in EURUSD, and these invalidation levels hold. Now, again, on EURUSD, this level here would be our invalidation level for this wave count. So what we would do is we would mark this as our invalidation level, and we would keep a good eye on this level here, the 110,594 level going forward. Hope this video was beneficial, guys. Look out for more breakdown videos, and I'll see you on the next one.